What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So it's been just over a month since the last time I checked in on ChargePoint, and in that time, the stock has really struggled to find a clear direction, as you can see here, by the constant move up, followed by a retracement. We've been in this tight trading range with ultimately a 12% move to the downside, with ChargePoint closing the week at $1.61. That, by the way, is only 5 cents above the new all-time low of $1.56. So why did we drop so low? Well, there are a couple of factors at play here. And so in today's video, I'll answer the question on what drove the price down, then take a look at the analyst ratings. Not everything here is as it seems. And I'll close with what I'm personally doing as far as buying, holding, or selling. As always, this is not to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on anything pertinent I'll be sharing. Drop the video an early like if you haven't already, and smash that subscribe button. Those are 2 easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. What everyone wants to know, of course, is what is going on with ChargePoint and why does it keep going down? Well, for starters, we have to look at the macro level. The market as a whole moved lower, and that is in big part due to the latest inflation reading that we have received this week. Inflation data, once again, came in hotter than expected. The Consumer Price Index, or CPI, came in at 3.5%, versus the 3.2% in February. Core CPI, which excludes food and energy, was 3.8%, which matches February, but ultimately was higher than anticipated. And so that's a problem. Those higher numbers sparked the market sell-off, and the reason goes right back to rate cuts, right? With every high inflation reading, it fends more FUD. So that's fear, uncertainty, and doubt around the Fed's ability to start cutting rates in June. The latest polls actually shows that the majority of market participants now expect rate cuts in July versus June. I still think that June is feasible, but then again, those expectations are changing. And so tying it back to ChargePoint, the relevance here is simple. Non-profitable companies in high interest rates environment are less likely to have institutional grade investors take a big allocation. And so when we look at ChargePoint specifically, it has 20% of its stock held by institutional grade investors. By comparison, Nvidia, which has done nothing but trend up so far this year, has 38.38% of its shares held by institutions. So reason number 1 has to do with the macro backdrop. Now on to reason number 2, and that's going to be specific to ChargePoint itself. The stock has received its first sell rating this week. And that came from Goldman Sachs analyst Mark Delaney, who downgraded ChargePoint from a neutral, that's the equivalent of hold, down to sell with an adjusted price target of $1.50. His reasoning? Well, there are 2 main points made in the note. Number 1, slower growth in the number of EVs sold in the US, which he believes will lead to less growth and demand for the services ChargePoint provides. Reason number 2 is the increased competition from providers of charging, namely from Tesla, not only because they opened their network, but also because Tesla sells level 2 charging hardware. This then makes them a direct competitor for ChargePoint and could further limit the demand for ChargePoint products and services. Those are all concerns I've covered on this channel in previous videos, but let's be real here. Institutions do not follow me, right? But they do follow accredited analysts, and so this rating here is going to carry weight. Now, speaking of those ratings, here's the interesting thing when we look at the overall consensus rating. We are still showing a moderate buy, and the breakdown is as follows. We now have 6 buy ratings instead of 5, also 6 hold ratings instead of 5 previously, and still no sell rating listed, meaning that this latest breaking news rating of sale that I'm bringing to you has not yet been fully reflected everywhere for everyone to see. That plays into how I think about this stock near term, but more on that later. Both the high end and low end of the range remain unchanged at $6 and $2 respectively. The average consensus price target is, however, slightly lower at $3.43 now versus the $3.58 prior. Despite the underperformance of the stock as of late, the consensus expectation still has a 113% upside built in from the median price target and just over 3 times the returns when we hit the top end of the range. So really, the expectations around the potential here are still intact. But we do have to consider this latest sell rating. So now that I know about it, what does that mean for me, especially with a $1.50 price target? Well, first off, an interesting observation when you look at the drop in the price of ChargePoint this week, you can see that it was a staircase drop with a 2 major step down, perfectly coinciding with the analyst downgrade and the CPI rating, right? Now, as this next week is about to kick off, news of escalating tension between Iran and Israel is very likely to rock markets, potentially similar to the drawdown once the Ukraine war kicked off a couple of years back. Additionally, we did see that cryptocurrency like Bitcoin, Ethereum, Dogecoin, and pretty much everything else already corrected lower on that breaking news this weekend. And when you add to that the upcoming Bitcoin halving next weekend, there's no shortage of headwinds to contend with. Basically, what I'm trying to say here is that I fully expect the remainder of April is going to be rocky as a result for ChargePoint with more downside. So prep yourself for that. When you look at the technical chart, you can see that even before all this happened, well, the stock had multiple attempts to try and go past the 50-day moving average, but was rejected consistently every single time. That resistance has been pretty strong. Now, with the earning call not expected until May, well, there's likely no opportunity for good news here, so we're going to be in an information vacuum for this stock particularly, which means that the broader market moves is going to dictate how ChargePoint trades. The bottom line for me, and really the last thing that I will say is this: there are a lot of moving pieces at the moment, and the best approach, for me at least, is going to be to wait and see how things shape up over the coming weeks. So my plan is to simply hold for the moment. Despite all the talks of EV growth slowing, auto manufacturers are still continuing to release new models. Slowing does not mean stopping when it comes to growth or scrapping the EV transition plans, right? So meaning that the long-term viability of this company is still intact. With that said, the capital that I currently have available to deploy is pretty limited at this point. And because I expect more downside for the market as a whole near term, chances are I will get a better deal on the ChargePoint stock in the weeks ahead, leading up to the earning call. Therefore, once again, the best approach for me is going to be to wait and see how things play out before committing more capital. And that's essentially where I am at the moment. But on that note, that is it for me today. If you found value in my content, click that like button and share with others who you think could also benefit from it. For my newcomers, subscribe, it's free, and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video and potentially during the week for an extra one. Until then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.